The problem with, I think, what she's doing is if you just managed your business well and had good bookkeeping, you don't need 5 bank accounts.
There are 5 bank accounts that I have set up as a 6-figure business owner. First bank account is an operating business account. The operating business account is the money that's coming in and out of your business on a day-to-day basis. The second account is for payouts, even for yourself. Number 3 is going to be your taxes. You want anywhere between 20 to 25% to go into that account every single month. The 4th account's not mandatory, but I do this in my business. I have a 4th account for donations. And the 5th and final account is like a miscellaneous account. I call this a team first account.
She's not specifically calling this profit first, and maybe this idea didn't originate for her from the profit first philosophy, but this sounds a lot like what the profit first people coach, is that you have a whole bunch of bank accounts and you put different amounts of money into each one to ensure that your profits aren't disappearing on you. The problem with, I think, what she's doing is if you just managed your business well and had good bookkeeping, you don't need 5 bank accounts. Downside of having a bunch of bank accounts is that you may end up forgetting to move money, like in your payroll account, and then payroll comes due, it comes out of the payroll account, and now it bounces, and now you have employees who didn't get paid, and now you have NSF fees and payroll fines and everything else. If you had just let your payroll come out of your main account, then as long as the business made enough to pay payroll, you're never going to bounce your payroll. But also, again, if you're keeping track of your numbers, you're looking at your profit and loss statement every month, you should know exactly where you're at without having to set it aside. Also, she said 20 to 25% take out for taxes, but what I think she means is 20 to 25% of her profit, which is a much smaller amount than 20 to 25% of whatever's in the operating account. So you've got to have a good system for tracking how much you're making and what's going on with your business anyway, just to know what amount to pull aside. So of all the accounts, I'd say one for tax savings could be a good idea if you're the kind of person who's not good at setting aside money or keeping track of how much you might owe. But it shouldn't be 20 to 25% of everything that comes in. It should be some percent of the amount that is your profit. So you still need good bookkeeping either way. And then a miscellaneous account and a donations account. I mean, if you want to make a donation, make a donation. If you want to have some team building or reinvest in the business, reinvest in the business. You don't need to put that into a separate account and then pull it back out into the business. Again, it all comes back to keeping good records. If you're keeping good records, you don't need any of this nonsense. And if you're not keeping good records, but you have 5 bank accounts, then you really don't know how much you need to be putting in each one anyway. You can't be very successful with one without the other. If you're going to only have one, have the bookkeeping.